Do you want a mortgage tip that's really going to help you save thousands today? Well, listen to this. By improving your credit score, you can go for a better rate. That's right. Let me explain. Your credit score, obviously, with your credit profile, depending on whether you've got good credit, bad credit, that kind of stuff, will give you a credit score. Depending on where your credit score is, depends on what kind of mortgage rate you'll be offered. It's one of the things they consider amongst other things. So the benefit of having a good credit score: one, as I mentioned, lower interest rates will be offered to you. Two, better loan terms. So if you've got a lower interest rate, that means that you could also get a lower term, which means you end up paying less interest, and it also increases your chances of approval in the first place. As of this recording, I just wanted to give a working example. So say, for example, you had a mortgage of 200,000 over, say, 25 years. If you had a credit rate score in the sort of amber, light green area, that's sort of 600 to sort of 700, the interest rate you might get offered is 4.5. But if you've got a really good or excellent credit score moving into the dark green area, you could get a credit score as little as sort of 4 rather than the 4.5. Now, if you had a credit score of 4.5, then, you know, paying the 200, you'd have a monthly payment of, you know, over £1,000. But if over the 25 years, and then if you had the lower one, you'd obviously be paying lower per month, and that can make a real difference. It can actually make a difference of thousands of. So my name is Manda. I am the mortgage coach. So I combine mortgage advice with financial coaching, and that's how I combine it together to sort of help you. Now, if you're finding these tips useful, please feel free to share with others, subscribe to my channel, because I do a lot of free content, and then you can click that notification button, and then you can know as and when my videos are coming out. So we've talked about the benefit of increasing your credit score, but how do you do that? Now, the first tip that I always give people is put yourself on the electoral roll. Now, what you can do is you can register yourself to be on the electoral roll. So then you have a registered address. They always like that. And it can actually, I've seen in some cases, it improve your credit score by 50 points just by doing that. And then if you don't want to vote for whatever reason, when the card comes, you can just ignore it, or you can even opt out to vote. That's completely up to you, but you have to register on the electoral roll to begin with. So that's the first one. The second one is check your report regularly. So what I normally do is I would download a check my file report. Now, the good thing about the check my file report is it has Experian, Equifax and TransUnion, and because sometimes it may have recorded the credit commitment on one report but not on the others, and then when you go to a lender, if they're using the report that it hasn't shown, then either you could get the mortgage approval and then later on get declined because they find out about something, or they could decline you straight away because there's inconsistencies. So it's really, really important to get a multi-agency report. The next thing is to pay your bills on time. Now, you may not be able to pay your credit card off in full, which is the recommended, but if you can at least make minimum payments. I mean, one way round it is, if you are having trouble every month covering your credit card bills, use some of the money that you're using for maybe petrol or food or something like that to pay the minimum payment on the credit card bill, and then use that balance to pay the groceries. So just reallocate the money across. I hope that makes sense. If it doesn't, go in the comments and I'll explain it in a bit more detail. The other thing is, make sure, you know, utilities and things like that, make sure you have enough money in your bank account to cover all of those, because if you have any trouble with loans, credit cards, utilities, if you miss any payments, mortgage payments are probably the worst, then they will penalise you for it. So that's something definitely to be aware of. The other two things that also affect your credit report is one, debt to income ratio, and two is the credit utilization. Now, credit utilization basically means what percentage of the maximum are you spending. So for example, if you've got a credit card limit of £1,000, they like you to have only spent 30% of it, so that's £300. So don't max out those credit cards. So that's one thing to do. The other thing is limit your credit applications. So if you know you're going to be having a remortgage or you want to purchase something in the next 6 months, don't do a lot of credit applications. In fact, if you can avoid applying for a car, anything like that, then I would wait. It's always best to wait till after you've done that remortgage or the actual mortgage application. The other thing is they like to see loyalty. So if you've had a bank account for a certain amount of years, like I always keep this bank account because I've had it since I was at uni. So it was an undergraduate's account, now whereas a graduate's account, and I've had it for sort of 20 odd years, and it really does look good. So if you open an account when you're a child and then you just keep that account, that really does make a difference because they show the longevity. Also with your credit card, if you've kept that credit card for years and years and years, then that also gives them a bit of comfort, because at the end of the day, the fact that the company, the lender, has allowed you to keep the credit card and keep possibly the current account with an overdraft shows that they're happy with the way you're managing your credit, and they've decided not to give to ask you not to have it. So that makes a big difference. The other thing is have a good mix of your credit. So have credit cards, have loans, have things like that, because at the end of the day, they will look at your portfolio of credit. So working with all of those will improve your credit, which means when you do go for a remortgage or when you go to buy a property, it really can help. So that's my hack for today. Take care.